Let's get more on the macro markets in India. Bring in Somnath Mukherjee, CIO and Senior Managing Partner at Ask Private Wealth. Pardon me. Somnath, great to have you on the programme. How are you approaching the Indian markets, given the balance of risk?
Good morning, and thanks for having me. From a markets perspective, I think if you look at the trifecta, i.e. valuations, earnings growth, and liquidity, valuations in India are stretched, but they have been stretched for some time, and there isn't too much of a Robinson Crusoe impact there. They have been stretched. Earnings growth, as some of the recent ones that you looked at just a bit while earlier, is slowing. In fact, has been slowing for the last couple of quarters. Expect that to remain modest right now as well. This quarter, which is underway, as well as the next one. What is, however, interestingly poised is India's structural macros are at not just great shape, they are in shape that have been, for the longest time, termed as ideal or ideal markers. Inflation, current account, the whole slew of macro structural stability factors are in absolute ideal shape. So we have a bit of a dilemma out here as far as allocations are concerned, where we have great structural macros, very different from what we see in the US and maybe parts of emerging Asia as well. On the other hand, we do have a cyclical slowdown underway. On top of everything,
Somnath, if you don't mind, can I just challenge you on the macro picture? Because you noted the slower earnings growth. At a corporate level, there seems to be some struggling, especially amongst the banks, which have been, let's face it, the stars in the market recently. We just talked about Axis Bank and the bad loan issues there. Then on the other hand, early on this week, we got passenger vehicles and two-wheelers, which are such an important barometer of the broader economy. They declined in the quarter. That must tell you that all is not well in certain aspects of the Indian economy. Does that need to be, or to what degree does that have to be priced?
Sure. So there are two aspects to it. One, structural macros, inflation, fiscal deficit, that sort of stuff. Those are, as I said, in ideal shape. India's inflation mark came out earlier this week, the lowest in many quarters, in fact, lowest in several years, came in at 2.1%. Fiscal deficit, India's government has been on a very steady glide path to consolidating the fisc. That's in great shape. Current account, again, expected to be in that 1% of GDP mark this year as well, again in great shape. So as I said, these markers are not just great, they're close to being ideal. What we do have a problem with is a cyclical growth momentum. Cyclical growth momentum has been slow. Cyclically, the two primary drivers of growth in India for the last 4 or 5 years, certainly since COVID, i.e. government capex as well as elite consumption. So the consumption by the top 5 or 7% of the population, both of those have slowed down and are in a process of consolidation. Now, we need to find an alternative driver to drive growth, but it is a cyclical issue, not a structural one, and hence should get worked out in the next few quarters. On top of that, there is also the additional thing of really good system liquidity. Not just system liquidity as in the banking system, but extremely strong liquidity flows into capital markets. As we stand today, mutual funds are sitting on cash. Indian domestic mutual funds are sitting on cash positions that are higher than long-term averages by 200 basis points. And flows into capital markets remain, domestic flows that is, remain as strong as they have ever been. In fact, systematic investment plans, which is the largest source of flows into the market, hit an all-time high of roughly $3 billion last month, which was higher than the previous all-time high, which was the previous month. So capital markets flows are very strong.
Thank you for that. So there are there are underpinnings that are supportive, but when you look at the IT at a sector level, how are you approaching IT services? How cautious do we have to be, notwithstanding the Wipro numbers, and we are seeing a near 3% lift in the stock price? Very different story when you consider Tech Mahindra and the peer group. So how are you approaching IT services in this context?
Yeah, that's a space that we have to watch quite closely. I think the impact of AI, automation, large language programming across the world is having a significant impact on not just the amount of work that can be outsourced, which is what most of India's IT services companies are modeled on, but also the number of jobs, the number of software engineers that can be hired for doing that job, and which has been the single biggest underpinning of India's growth since 1991. So that's an area that we have to keep watching out for. I think there is a requirement for caution out there. Without getting into specific companies, I think the whole sector has to reimagine its models. The whole sector has to find out a new growth path for itself. Because what worked for the last 3 decades is clearly being disrupted in a major way.
Yes. Somnath, how closely are you watching the evolution of a US-India trade deal? We are hearing that we could see a mini deal, interim deal, early harvest soon, and we'll have to wait for a final deal that could eventuate and materialize perhaps in September, October. How closely is the market watching this, and to what degree does it matter for market confidence and higher pricing?
Enormously. I think a trade deal with the US is extremely important, and markets are watching it very carefully, not least because there is a certain amount of daily momentum thanks to what President Trump is doing almost on a daily basis. The US trade deal is not just important because India runs its largest trade surplus with the US, but India is also one of the very few countries that runs a very large services trade surplus with the US. So it's incredibly important that we get a deal in place. However, I think we have reasons to be more sanguine about the way the end game will play itself out. It looks like tariffs for everybody will go up en masse across the board. That's what it looks like. And India should be able to work out a deal that comparatively places it fairly okay compared to its main competitors. Not least because there is also the political angle to it. Despite some recent hiccups, US-India strategic relations are clearly on an upswing again structurally. There are multiple deals that are happening on the aerospace and defense side.
Yes.
A lot of people are probably not aware that India is very close to launching its heaviest ever satellite, which is a JV between India's ISRO and NASA. It's called NISAR, which is a $2 billion satellite that's going to get launched very soon. There's a whole lot of interesting stuff that's going on the strategic side, which gives us confidence that a deal will be on the table, and not such a bad one.
Absolutely. Somnath, and let's just segue into defence that you raised there. It's really one of the beneficiaries of this indigenization of manufacturing under the Modi administration. But from a market standpoint, do you think defence and small cap defence has run too fast, too hard, and are there valuation concerns here?
Oh, yes, you could absolutely say that. Some of the smaller companies in the area have really run up very fast. Part of the reason is lack of supply. The listed market does not have too many options for investors to invest if they are choosing India's defense and aerospace as a theme. And most of the investable companies are, the larger ones at least, are state-owned. And they too have run up quite fast. But that's the nature of the beast on the listed side. Valuations typically tend to overshoot during times of a structural pivot in a specific theme, which is fine. I mean, investors need to be careful about both expectations as well as entry point averaging while they play the theme. But is defense a really fantastic new opportunity for Indian investors, both on the listed side as well as emerging extremely in a very large manner on the unlisted side? Yes, I think the global military spends are going up, and India's
Yes.
will grow faster than the rest of the world.
Somnath, you mentioned liquidity, and with that in mind, do you think that the Jane Street effect has more or less washed out? Are the regulators now ahead of the curve, or are there other skeletons potentially that could fall out of the closet? And what are the market implications of all that?
No, I give a lot of credit to Indian regulators, both the primary regulator, SEBI, and RBI, which is the banking regulator. They are typically quite on the ball on matters of market stability, as well as macro stability as well. Is the impact of Jane Street fully washed out? I don't know. I think we should watch the numbers for the next few weeks to arrive at a conclusion. Is that something that will require market participants to reorient in terms of what they need to do? What are the kind of things that they need to position for?
Yes.
Yes, of course. I think there's this heavy discussions going on within most institutions in Mumbai about that.
Somnath, always a pleasure talking to you, sir. Thank you very much indeed for your insights on the macro and the markets in India. Somnath Mukherjee there from Ask Private Wealth. That's all the time that we have today on